Hello everyone. Today we're going to discuss the top 3 ASX Buy Now Pay Later stocks. The Buy Now Pay Later or BNPL sector has certainly captured investors' attentions and imaginations over the last couple of years. This is due to the exponential growth rate in customers, transaction values and of course share price appreciation. More recently, the sector has been thrust back into the spotlight with the acquisition of local market leader Afterpay by US-based Square Inc. With this exciting development as a backdrop for today's video, let's see if we can find the top 3 ASX Buy Now Pay Later stocks. Let's kick off with a very quick overview of the concept, as most people are probably aware of the model and perhaps have even used it sometime in the recent past to make a purchase. In its most basic sense, BNPL is a payment system facilitating commerce between retailers and consumers. Consumers can make an instant purchase whilst being able to spread the cost of that purchase over an interest-free period. The purchase price is generally broken up into instalments, which are usually due every few weeks or so. BNPL helps consumers better budget their purchases, and many also appreciate the interest-free nature of the product. There are generally fewer credit checks, and it's less likely you're going to be hit with massive fees and interest rates if you don't pay on time, although there are certainly some fees involved if you don't. Merchants, on the other hand, like the fact they get paid up front for a purchase, minus some fees for the BNPL provider, of course. And given so many customers have embraced this concept, many merchants now feel obligated to offer a range of BNPL options in order to attract and retain customers. For the BNPL companies, there are fees to be earned from merchants and also late fees from customers who don't pay on time. Like any credit provider, there are significant risks in lending consumers money. But defaults in the BNPL sector are the small minority of cases, with most providers seeing only a few % of sales lost to non-payments. Interestingly, the sector generally doesn't chase up debtors, instead using the stick of permanent platform bans in these relatively rare cases. So, consumers like it, merchants like it, and the sector has been growing very quickly as a result. That's a nice segue into my next slide about the opportunity in the BNPL sector. Currently, credit cards, BNPL's main competitor, account for just over 30% of global retail sales. In comparison, BNPL has just 1.8% of the global payments pie, so there's plenty of room for catch-up. Indeed, various think tanks expect the BNPL sector to more than double in size by as soon as 2025, and long-term compound annual growth rate estimates range from around 20% to as high as 45% per annum. There are few other sectors in the stock market at the moment that are experiencing such growth or that have such a huge opportunity going forward. For this reason, we've seen an explosion in locally listed BNPL players, many of which have added BNPL options to existing financial services businesses. This table shows all of the ASX listed BNPL players in alphabetical order. In the middle column, we can see that not all of these stocks have enjoyed the same growth in share price over the last 12 months. Many of the more recent entrants, like Lay-By Group, Latitude, Payrite and Zbit, have suffered substantial falls since their respective IPOs. The biggest player, and by a long way, is Afterpay. At around $39 billion in market capitalisation, it's nearly 10 times bigger than nearest rival Zip, and there's daylight again to the next largest pure BNPL player in Sezzle. That one has a market cap of less than $1 billion. Before we look at the top 3 BNPL picks, let's quickly sort them into 2 groups. This group we've labelled Flavour or Recently Added. This means that these stocks typically had other financial services businesses prior to adding a BNPL option. For many of these businesses, BNPL may not be the main focus of their activities going forward. The companies on this list are for the most part BNPL specialists. This is not to say that they aren't looking to go the other way and add more traditional financial services like Afterpay and Zip have already done. Rather, for now, BNPL is their main source of revenue. Another quick note before we hit our top 3. This one is to do with the methodology I use to identify stocks of interest. Generally, I like to start with the chart. That is, I look for charts in strong uptrends. Stocks in strong uptrends are experiencing excess demand for their shares compared to supply, and that's generally because the stock has attractive fundamentals, for example growing earnings and a reasonable valuation. It's for these reasons investors are scrambling to buy the stock in the first place, thus increasing demand, and for the same reasons again why investors don't want to sell, thus keeping supply relatively low. High demand, low supply equals a rising price. So if I find a stock in an uptrend, I'm comfortable there's a high degree of urgency in conducting further analysis compared to if a stock is in a downtrend. And this brings me to the list of ASX BNPL stocks. Looking through their charts, there's very little to get excited about. With so many pronounced and entrenched downtrends, I feel there's just little urgency to do any further fundamental analysis right now. So for this reason, in this video, we're going to stick with the big two, and I'm also going to include another surprise stock that's in the payment space, but it's not strictly a BNPL player. First up, market leader Afterpay, and where better to start than with its acquisition by payment solution provider Square Inc. If you're an Afterpay shareholder, around the early part of 2022, your Afterpay shares are going to be converted into Square shares. The good news is that both companies are growing rapidly, and the combination of the two businesses will unlock significant synergies and cross-selling opportunities. For Afterpay, it gets instant access to Square's portfolio of merchant customers, which number in the millions. And this is a major step up from Afterpay's existing merchant pool of around 100,000. The businesses are very different but complementary, so for Afterpay shareholders, their investment becomes instantly more diversified than simply owning a BNPL provider. Also, as Afterpay will be part of a group which will be roughly 7 times bigger, it'll have better access to funding options, and it'll also enjoy better access to US capital markets through a listing on the NYSE. Let's have a quick look at Afterpay's main BNPL metrics. The company grew its active users to 16.2 million in FY21, up 63% over the previous year. It now has access to over 100,000 merchants, which made sales in excess of 22 billion in the financial year. Afterpay is still heavily investing in marketing and growth, however, and that's the reason why it's yet to crack into the operating cash flow positive territory, let alone turn a profit. We're going to see Zip's metrics in a second, but before we do, let's check out a couple of interesting stats from global BNPL leader Sweden's Klarna. Klarna has reported similar stellar growth to our local hopefuls, but having been around substantially longer and serving larger markets in Europe, it's grown to an impressive 90 million active customers and boasts access to over 250,000 merchants. Klarna, along with PayPal's new Pay in 4 and Apple's imminent entrance into the space, certainly makes BNPL a hotly contested market. And it's impossible to ignore these risks when considering a potential investment in any of our local BNPL players. Let's look at Afterpay's key numbers. Starting with broker consensus, we have an average rating of a buy with 3 strong buys, 6 buys, 5 holds and 1 strong sell. The broker's average price target is $141.25, which provides approximately 10% upside from the current price. If we look at Afterpay's revenue growth over the last 4 years, it has been excellent. And looking forward, the brokers are expecting revenues to grow almost exponentially into FY24. Profits, however, have been elusive, with investors having to wait until FY23 to see substantial returns. But when we get there, profits are also expected to grow quickly. And you're paying a high price for that growth. We can see that Afterpay is trading on an eye-watering 298 times FY23 earnings. Due to the rapid growth in earnings, though, this will fall quickly, but we're still talking 127 times FY24 earnings, and it will still be in the low triple digits by FY25. The question is whether there's enough growth to justify the valuation, and the PEG would suggest not at least until FY24. Ideally, we'd like to see this ratio less than 1. So FY23's 2 is disappointing, but FY24's 0.86 is attractive. To buy Afterpay and back this incredible growth story, you really need to be comfortable with 2 things. First, paying 100 times earnings from 2 years from now, and 2, the possibility those earnings don't materialise, or at least not to the degree predicted. We call this second concept execution risk, and given the competition in this sector, we rate this as very high. The Afterpay weekly chart was looking solid up until this week, and that's possibly a reflection of the positive broker consensus and the degree of buffer in the average target price. We can see a strong long-term uptrend, which was helped a great deal by that Square news, But recent weeks' candles indicate the possibility of a pullback in the short term, which could target the dynamic short-term trend zone, that's the light green zone, which typically acts as an area of support. This is going to be in the low 120s, and we'd want to wait and see how the price action behaves there before calling Afterpay a technical buy. Given the long-term trend is still up, and given the room to our fair value target of $143.80, about 12% at current prices, we're going with a hold rating, high risk if you've got it, but a watch for an appropriate buy signal at the technical support level if you don't. Next up is Zip, Afterpay's distant second. The elephant in the room is whether this is the next obvious takeover target. Certainly, there are a number of elephants in the room which could do the job, ranging from other large and mid-tier BNPL players to larger financial institutions which feel they've missed the boat on BNPL and want a Zip-sized running start. One can't help feel, with the scale of competition out there, this might well be Zip's best option. But corporate action aside, there's a great deal to like about the company, including its 7.3 million active customers, 4.4 million of which are in the US, and those US customers are particularly sticky and very active, transacting at over 30 times per annum, one of the best stats in the industry. Like Afterpay, Zip's growth numbers are spectacular, but investors are still waiting for a profit as the company continues to invest heavily in its growth. But unlike Afterpay, which had around a $500 million operating cash flow deficit, Zip has gone operating cash flow positive 2 years in a row now, and nicely so in FY21 to the tune of $44 million. The other comparison which demonstrates Zip's relative attractiveness to Afterpay is the fact its enterprise value to revenue, or EV to R, is around 1/3 of Afterpay's. EV to R is a handy valuation tool for companies that don't yet have a PE ratio. We're basically measuring how much we're paying for the company's revenue, so lesser is better. The jump in EPS isn't expected to occur until FY24, when we drop to a PE ratio of 90 times. And sure, this is high for, say, ANZ Bank, but it compares favourably to Afterpay's 127 times FY24 earnings. The PEG could be better at 1.6 for FY24 though. As for the brokers, they're a little more circumspect on Zip than Afterpay. Despite the more attractive valuation metrics, we're looking at an average recommendation of a hold, with 3 strong buys, 3 buys, 1 hold, and very interestingly, and maybe concerningly, 4 sells. We can perhaps see the benefit of size and scale for Afterpay and the penalty applied to Zip for not having it. The broker's price target is relatively bullish, however, at $8.42, and allows for just over 25% in upside from current prices. The weekly chart looks shaky in the short to medium term, with short-term EMAs threatening to cross down and signal an official short-term downtrend. The price action shows well-entrenched lower peaks, which demonstrates increasing supply. On the other hand, the troughs are hanging in there, indicating demand is working around that $6.50 to $7 zone, but it's far from convincing. A break of $6.50 is a real danger here, and that could see a quick drop to around the long-term uptrend zone, that's the dark green zone, and the December 2020 low of $4.96. Based upon our earnings and growth rate assumptions, we've calculated a fair value target of $8.82 for Zip, which is a touch better than the brokers, allowing for around 31% upside. But given the uncertain technical picture, the competition in the sector, and the uncertainty in general around Zip delivering on its growth aspirations, the best we can do is a hold if you've got it, and a high risk rating. If you don't currently have Zip shares, there's little reason to do anything right now, apart from watch and wait for the chart situation to improve. Okay, you got me. Whilst Pushpay sounds like a buy now, pay later stock, it's far from it. Pushpay is in the payments facilitation sector though, and like the BNPLs, it brings together consumers and organisations, making it easier for both parties to get what they want out of a transaction. In this case though, the consumers are members of various faith congregations and other not-for-profits, and the organisations are seeking donations. The COVID pandemic has changed the way these organisations raise money from donors forever. Gone is unhygienic cash and coins, and in is a totally digital, secure and easy to track and manage software-based application. And Pushpay is the leader in the industry with over 11,000 organisations on its customer list. It handled an impressive $7 billion worth of transactions in FY21 and derived just over $41 million in net profits from the fees it charges for its software and services. Other key stats we really like about Pushpay is its strong and growing operating cash flows. That means it's self-sustaining in terms of investing in its own growth, and it also increases the likelihood of dividends in the near future. Finally, because Pushpay has adopted a software as a service or SaaS model, it has excellent margins. Looking at the numbers for Pushpay, we can see that the brokers are at an average rating of a buy, but only just, with 1 buy and 3 holds. They have an average price target of $2.15, which allows for around 21% upside from the current price. Revenue growth and NPAT charts look impressive, with the strong track record of growth in each set to continue through FY24. The valuation of 32 times current FY's earnings is quite reasonable, especially when considering an average growth rate in the low 20% range for the next 3 years. This brings the PE down quickly to an attractive 19 times earnings by FY24. The PEG is solid, hovering around and below the important 1 level, so we're not overpaying for the growth in this business. Return on equity, which is a measure of business efficiency, is typically good for companies with a software as a service model. But the 49% return this year, rising to 78% in FY24, is outstanding. The chart looks very constructive, with an extended period of consolidation around that 150 to 170 level looking like it's now breaking to the upside. We like the prevalence of white candles more recently, and this week's break above the peaks set in July is very encouraging. Altogether, it's looking increasingly likely the supply overhang from that big run-up in 2020 is finally taken care of. Based upon our earnings and growth estimates for Pushpay, our fair value target is a couple of pips better than the brokers at $2.17, which allows for around 22% upside from the current price. We think the execution risk is low on this one, and adding in the attractive valuation and the chart, we've gone with a buy, low risk rating. Let's wrap up our look at the top 3 ASX BNPL stocks. Well, at least 2 BNPLs and 1 payment software innovator. Firstly, the biggest and the best, at least of the local players, Afterpay, and to be fair, potentially now a serious global contender given the massive bump in scale and scope it's going to enjoy from the Square acquisition. Look, we like the deal and the chart to a large extent, and the valuation upside is reasonable. But we're expecting a bit of a technical correction in the short term. Until we see how that plays out, the best we can go is a hold, high risk given the uncertainty in the sector, with a fair value target of $143.80. Next up, Zip, a conundrum wrapped in a riddle. There's plenty to like here, not least its superiority to Afterpay on a valuation basis, but that discount is probably there for a good reason, and the chart appears to back this up. It doesn't look like the big brokers see the blue sky that many smaller investors frothed over at the start of this year. We're a hold at best, but even that's on shaky ground with one look at the chart. Its high risk rating is obvious, and the very attractive fair value target of $8.82 is not enough to entice us in, at least not at the moment. Finally, Pushpay, the imposter in this video, but a payments provider nonetheless. It's certainly an innovative and exciting business with great growth, great operating cash flows, and excellent and growing margins. The chart is turning up, and the valuation looks attractive. We're confident it's going to at least meet our earnings and growth targets, and for this reason, we're a low-risk buy with a fair value target of $2.17, allowing for around 24% upside. At Think Markets, your success is our success. We aim to provide you with the best trading tools, the best customer service, and the most competitive flat-rate brokerage in the industry for CHESS-sponsored holdings. You can open a trading account in just minutes. Just head to www.thinkmarkets.com/au for more information and to access all of our regular research and educational content. If you're watching on YouTube and like what you've seen, make sure you smash that like button, be sure to subscribe, and be sure to turn on notifications so you'll get an alert for my next video. Well, that's it for me this time. I trust you enjoyed this look at the top 3 ASX BNPL players. All the best for your trading and investing until we catch up again. Bye-bye for now.